Hello, and welcome to How to Trade Cryptocurrency for Noobs. This is my guide for beginners that want to get into trading cryptocurrency. So let's get right into this. So how to trade crypto for noobs. As always, this document is in the description if you guys want to pull it up and follow along with me or read through it. Also, it comes with a lot of resources and things of that nature, but this is basically for anybody that's a beginner and new to cryptocurrency. I wanted to point out the do's and the don'ts that I've learned over the past few years trading cryptocurrency and help you guys get into this because there's a lot of money to be made trading cryptocurrency. I have made a ton of money trading cryptocurrency. All of my roommates and my buddies have all made money trading cryptocurrency. And I just want other people to do the same. So this is kind of the beginner's guide for anybody that basically has no clue what they're doing but wants to get into this. So yeah, go ahead and get this document in the video description to start off with. But we'll just kind of go off with the very basics. First, you need to get Bitcoins or some type of cryptocurrency. The easiest way to do that would be to sign up for one of these purchasing websites such as Gemini or Coinbase. That's where you can buy some Bitcoins, and it's really easy. Coinbase you can set up with a debit card. You just have to get verified, and then you can get yourself some Bitcoins. And then you need to sign up for an exchange such as Bittrex or Poloniex. Links to both of these in the document here. You just click on those. And then you basically just have to send some funds over to the account. So there's a little video that I made for doing that right here. And once those funds are in the account, you can trade between all of these different coins. If you go to coinmarketcap.com, this is a great place, especially if you're new to this, to see all of the coins because there's a lot of them. As you can see, there's over 1,300 cryptocurrencies currently. We have a $356 billion market cap, which by the way is very small. It's my guess that down the road people are going to be watching this video and maybe by 2020 we see a $3 trillion market cap. Just an idea. So basically what I look for is all of these different coins, and we want to buy panic in one of these coins that are on a strong bullish trend. So what is a strong bullish trend? Here's an example of a strong bullish trend. This is Bitcoin. That means bullish means up, so it's been going up in value very strongly since the beginning of this year. So this is a strong bullish trend, meaning that every single time people panic, the sellers get eaten up by buyers. As you can see, when the prices hit 3,000, everybody panicked to 1,800. When the prices hit 5,000, everybody panicked to 3,000. And when the prices hit 8,000, everybody panicked to 5,000. So it's just, how cryptocurrency is for the past year. It's been on a strong bullish trend. Every single time people panic, you buy the dip and it gets engulfed by buyers. So what you do is you want to find a coin on this list on coinmarketcap.com that's in a relative dip. Now, some things for beginners is I like to trade based on the charts. Just after a lot of time trading crypto, I've tried to buy or sell based on news, and what I have found to be the most accurate is to use these charts and actually look at the prices because you can see the cycles of the prices, and that's very predictable, whereas the news is a little bit less predictable. So if you're new to this, then I would focus on learning these charts. So one of the first things that I've looked at basically when I was first getting into this was I would read all news and only buy or sell based on news articles. And it worked a little bit because cryptocurrency was so young at the time that it kind of worked, but it was generally unreliable. And so over a lot of time, I found that buying people's fear is the only thing that will give you a statistical probability where you can consistently win that I have found personally in cryptocurrency. So you buy people's panic when it's on a strong trend. All right, so that's kind of a lot to hear at the very start, and it's going to be a little overwhelming as you get into this. There is a lot to learn and a lot to understand. But if you're trying to trade this, all you really need to know is how to use these exchanges and how to predict the charts. And trading it is how you make money doing this. So I'm assuming it's what most people that are watching this video want to learn how to do. All right, so the first thing that I want to talk about is you always need to have a plan before you take the trade. Now, what does that mean? That means you need to know where you plan to sell and where you plan to sell if you're wrong. So if the trade doesn't go as planned, where you're willing to take your loss, and if the trade does go as planned, where you're trying to take your profit. So for example, a recent trade that I did in Bitcoin. So I made a trading plan in Bitcoin that I would buy the panic out from about $6,100 down to the 5,300 range. So right here, I was day trading Bitcoin, meaning I was just buying in for a short period of time, planning to sell a couple days later or within the same day with a profit. So I made a plan to buy at about $530 or $5,300. And then my stop loss I had set at $5,000. So I would have taken around a 5 to 10% loss if I was wrong, but I wasn't wrong in this case. And my plan to sell was at 78. So I basically rode this from this panic right here all the way up to here in a short-term little trade on Bitcoin recently. Now, the reason I say that is because I had to have a trading plan before I took that trade. So I had to know where I was going to take my profit and know where I was going to take my loss if I'm wrong. Now, the reason that you do that is because there's so much unpredictable movement and things that can just throw you off if you're new to this, that you always have to stick to a plan. Otherwise, you won't be able to break it down to something that you can repeat, right? Because you want to be able to find a certain pattern or find what works for you so that every time you buy, you can sell later in profit and repeat that process over and over again. So in this case, I have found with Bitcoin, you always buy fear. For example, when everybody thought Bitcoin was dead and it hit 5,000 and it came back down to 3,000, I made a video specifically talking about how Bitcoin would go to $10,000 from here because I wanted people to understand that this was panic and it would be completely engulfed by buyers. And sure enough, it was. It's completely engulfed by buyers. And now we're passing 10,000 and it looks like our next stop is closer to 15 for Bitcoin. So that was just me pointing out the panic. It works for me to buy panic in cryptocurrency and it works for everybody else. That's really the best trading plan, is buying panic. And that sounds really basic, but if you kind of train yourself to go and look for the days that everybody's scared out of their minds on Twitter and everybody thinks it's dead, you can just kind of assume that people are making bad decisions and selling their coins for cheaper than they should be. They're breaking the rule right here, which is never panic sell in a dip. So this is panic, right? People got scared, it went up, they got scared, and so they panic, they sold. Anybody that was making a logical decision wouldn't have sold their Bitcoin at 3,000 here, because if you're thinking logically in trading, you never sell panic, because we actually buy panic. It's in our trading plans to buy panic, because that's the only point in time when you know it's going to bounce, because people are selling it for less than what they should, right? So all right, so yeah, you never want to panic sell in a dip, and you always want to buy people's panic and red candles. You never want to buy a green candle. So when things start to go green like this, like when the prices broke 3,000 and they just went really green like this, and bullish, or up as traders call it, bullish means up, then you don't want to buy on that green candle. I know it's exciting, but you have to train yourself to think opposite of that, because if you buy the top, that is everybody that buys the top ends up getting scared at the bottom because they're afraid that they're going to lose their investment because they had a bad entry. So you never want to buy green candles. It's just a bad trading practice. You want to be selling into green candles when everybody else is getting excited and making bad trading decisions, buying something that's overpriced, right? They're too excited. They're buying it even though it's way too valuable at that point. It needs to come back down and see how much it's actually worth. And that was the case right here. It got overbought, and then it had to come back down and see what it was actually worth right here. And so that's just very common. It's just greed and fear over and over and over again. So as you can see, in that case, you just do not want to buy green candles. And it doesn't matter what chart you're on. If you look and you test and see what would work, then you'll notice that buying green candles never works. All right, so now that you've kind of got the basic buy the dip mentality in and you understand what exchanges are, let me tell you a little bit about TradingView. This is the website that I'm using to look at these prices. TradingView.com, there's lots of them. Another one is Coinigy.com. But for me personally, I like to use TradingView. Now this website is nice because you can draw on the graph and then you can come back later and the prices will move live with the chart, but your drawing will stay. So you can make your trading plan on this website and then come back and check later to see if you're right or wrong on that trading plan. So it's kind of a way that, especially if you're new to this, you can, before you even bet real money, test some plans and see if it's something you could actually do. So basically you can start predicting stuff and seeing if you have a knack for it before you even bet real money on it. Now I will say the emotional factor is a little bit different if you do that. If there's money on the line, it's a little bit of a different game. So you'll have to train yourself for that later, but you can get the basic idea without betting real money on anything. All right, so TradingView is the best place, or at least the place that I personally use to do all of my TA. And sometimes I use Coinigy too, but for the most part, I've just been using TradingView. Now, the reason that this place is so great is, like I said, you can draw on these charts. There's all kinds of tools they leave for you so that you can calculate targets on stuff. You'll learn more about that, especially if you buy my TradingView course, which I'm working on right now. It should be out this spring. So I talk about all of these tools on TradingView and how to use all of them, how to set alerts, how to do paper trading, how to use all the indicators, how to customize it like I have it customized. So I'm working on that TradingView course right now. It's all recorded. I'm just finishing all of the editing right now. And then when the new website is up in the spring, I'm going to release it with that. So looking forward to that. But this is basically how you're going to get all of your predictions and get good at trading. On here, we do what's called technical analysis, and that's kind of what all of my methodology for trading is based on. We use technical factors to predict the market. So that's kind of what I teach, and that's what TradingView is designed for, is performing technical analysis on charts. So yeah. All right, now let's go over into some of these other things. So again, I avoid buying and selling based on news articles because I found it to be unreliable, and a lot of those news articles are specifically designed to get people to sell their coins for cheaper than they should. It's called FUD, fear, uncertainty, and doubt. They try to make people scared so that they panic and then sell and make bad trading decisions. It's sad, but it's just the sad truth of the matter is that there's a lot of manipulation and corruption, especially I've noticed it in the news article end of things in cryptocurrency. So be very mindful and aware of fear, uncertainty, and doubt articles or FUD articles and avoid those. If you do want to read news, stick to the most logical stuff you can possibly find. And again, I would avoid buying or selling based on it. Just use it as an additional kind of way to build your idea about the market. And again, never gamble. You want to use indicators and patterns and then test them over and over so you can see what your win or loss percentage is. And then if you're in a winning percentage, like 70% of your trades win, then you can continue to repeat that over and over and over to double your money. So that's why I use indicators and patterns to kind of build that trading plan so you can determine those entries and exits. And I teach all of that in my VIP course. And if that's something that you're interested in, my website is right here in the resources as well. I always keep my long-term and my day trading accounts separate. This is the most effective way to avoid confusion. And also long-term is different than day trading. So if you are a trader, then you are looking to continue to double that money over and over, buy and sell, buy and sell, and buy and sell. But if you're an investor and you're doing long-term investing, most long-term investors either don't sell for a few years or they never sell, right? Like Warren Buffett's long-term ideas basically never sell. So it is a different thing, and so that's why I separate those two accounts. I personally have a bigger trading account than I have long-term, but that's just because I'm better at trading, or at least it's easier for me and I enjoy it more. So I allocate more of my money to the trading aspect of it because for me that works best. Keep majority in BTC and USD at all times for stability. So Bitcoin is the strongest bullish trend, and until it breaks that bullish trend, it's what you should have the majority of your crypto holdings in. And we know that the whales hold 55% because 55% of the entire dominance is in Bitcoin. So that means that majority of the people in cryptocurrency are allocating the most percentage to Bitcoin, meaning that they have the most faith in Bitcoin's success. So you should too. USD is important for stability. I use Tether sometimes. Let's see. Never margin trade if you're a beginner. Margin trading is really overwhelming if you're new to this, and the emotional factors that are created by leveraging your account like that are just not recommended if you're a beginner. Find your technique and stick with what works for you. Personally, I use a lot of Elliott waves and Fibonacci. So if you want to Google those things or learn them in my lifetime VIP course on my website, you can. Yeah, find your technique and stick with it. Track your trades. Right now, I am just using a Google Sheet to track all of my day trades and Blockfolio to track my long-term on my iPhone. So that's Blockfolio. It's a mobile app. And make it a game. Have fun, honestly, because it is so important to keep a positive mindset and enjoy doing this, because if you want to learn cryptocurrency trading, you need to have the right mindset to do that. And it's just like anything else in life. If you're not willing to have fun doing it, you're not willing to enjoy it while you do, you probably won't learn how to be proficient in it. So make it a game and enjoy it. That's one of the biggest words of advice I have for you in cryptocurrency. And then, yeah, always use stop losses. I have that video right here, how to set a stop loss in the resources, and exercise absolute patience. Not having a position is also a position. So sometimes what I mean by that is it's better to not take a trade. So you want to wait until everybody's legitimately panicking the most. I know initially you're going to want to make a lot of money doing this, but you have to change your mindset around and try to make the best trading decisions instead of trying to make the most money. Because if you try to make the best trading decisions, you will make the most money. But you have to kind of think the other way around first. So not having a position is a good practice, and patience will always be rewarded in trading. Thank you so much for watching today's video. I hope that you learned something. If you have any questions, go ahead and let me know in the comment section below. Hit that like button, hit that subscribe button, and I will catch you guys in the next videos. As always, stay profitable.